What's good, everybody? It's the Go Report checking in for a midweek review. So Nvidia just reported earnings and they dominated again. So what else is new? The report was different. This report told Wall Street that AI has officially gone mainstream. So let's break it down. Straight to the facts. For Q1 fiscal year 2027, revenue hit $82 billion, which was up 85% from a year ago. Earnings per share, as expected, topped the street's estimates. Data center revenue doubled year over year to $75 billion. That's a 92% increase in revenue. For next quarter, Nvidia guided revenue to $91 billion. This was above the $86 billion that was expected. Hyperscalers are big time spending, and these numbers prove it. Hyperscalers believe in AI and they believe in Nvidia chips. Clear as day. So for China, this was interesting. Nvidia stated it is not assuming any data center compute revenue from China in their guidance. So think about that. China, which is one of the biggest chip makers on earth, is sitting at zero on Nvidia's books due to export restrictions. And they're still guiding 91 billion. That's their guidance without China. So that tells you everything about how mainstream AI demand has become everything to everybody. They have such a strong business that they don't even need China to impress Wall Street. Now imagine if they actually do get China revenue. It will be a surprise boost, and I think that's just pretty much what will happen. I think Nvidia is just playing conservative with the numbers, and they're just not counting on China revenue. But that just tells you how strong Nvidia is right now. So I got a chance to listen to the earnings call yesterday evening, and this is what stuck out the most to me. CEO Jensen Huang said the next wave for Nvidia or the AI infrastructure play is robots and autonomous vehicles to compile data. And that's the next massive opportunity on the horizon for AI. And if you recall, in some of my write-ups, I pretty much said that with regards to Tesla CEO Elon Musk, he said the same exact thing, that the future is pretty much autonomous vehicles and robots. And I've said this time and time again, Tesla is not a car company. It's really a data intelligence company. So as we gear off into, different areas of AI, it's not just going to be your language models, your large language models, your Geminis, your Groks. It's going into autonomous vehicles and it's going into robots. So throughout the whole earnings report, what stuck out most to me, this was the real story that most people glossed over. And this is the part that, really caught my attention. Nvidia raised its quarterly dividend from 1 cent to 25 cents per share. That's a 2,400% increase. The board authorized an $80 billion share repurchase. And pretty much this to me sounds like Apple when Apple started paying real dividends. It wasn't just a financial move. It was a statement that we've arrived. Nvidia feels like it's already arrived as a company. It's basically saying we have more cash than we know what to do with, and we're sharing it. And that's the message that is being sent. Growth companies don't really raise dividends 2,400%. Mainstream dominant companies do. So this is a surprise shift that they pretty much arrived. Nvidia doesn't see itself as a growth company trying to prove itself anymore. They see themselves as established, and they're here now. So now here's where it really gets interesting. The moment Nvidia, to me, starts acting like a dividend-paying company, that opens the door and sends a signal to competitors. A company that, to me, that raises dividends is signaling maturity. And maturity on Wall Street can mean slower growth. That's not a knock on the company. That's not a knock on Nvidia. It's just pure math. That's where, AMD, Marvell, Broadcom, these are companies I talk about all the time, step into the conversation. If you're a growth-hungry investor and Nvidia is starting to feel like a blue chip, you're starting to look for alternatives. AMD is still in full attack mode on the AI GPUs. Marvell and Broadcom, who I both talk about all the time, are building chips directly for Google and Amazon, who want to take out their dependency on Nvidia. So the bottom line is, Nvidia didn't lose anything by raising their dividends, but it did hand its competitors a narrative, and the competitors are going to take advantage of that. So that's something that we have to pretty much pay attention to going forward. So AI is not a trend anymore. It's not a fad. It's infrastructure. It's mainstream. Record revenues, record cash flow, a 2,400% dividend increase, and great guidance. So my thinking is, if it looks like an apple, if it acts like an apple, and it tastes like an apple, well then it's just an apple with growth. Go report checking out.